Good afternoon, everyone. Welcome to Hit the Bid here on July 26th. This is Ty Robbie here with your Week 30 Market Watch. Today, we're going to take a technical look at our charts from the last week and see what you need to be ready for as we head into Week 30. So let's jump right in and get started. First on the board today, we got our October live cattle. Last week, we did see more downside here across this cattle market. Good back and forth action, but this October live contract testing some new yearly lows, pushing all the way down into the 217, 218 area late last week, but seeing a nice little rally here on Thursday and Friday back up into the 220s. So all week long we just had some increased volatility here, some nice ranges, just kind of bouncing back and forth between about 225 and 217. This market seeing good back and forth action here. We have seen a lot of selling pressure here in recent weeks. The last 4 to 5 weeks here have seen a pretty significant discount here off these recent highs up in the 240s. This market settling all the way back down here into some new yearly lows and just kind of hitting some overextended levels. Wouldn't be surprised to see this thing kind of balance out after about a 10% discount off of these recent all-time highs. This market just looking like it should be seeing a little bit of a relief rally here in the days to come, but we do have a downtrend shaping up here, so don't look for that. Don't expect that upside to last very long. If this market continues to rally back above last week's high at 224.67, look for a nice little rally up here in the 227 to 230 area where we should run into some more sellers up here around our declining moving averages. This market seen a lot of selling pressure recently here, and we do have a lot of leftover supply, so it's going to be a tough climb out of here for these bulls, but at the moment looking like they could be poised for a nice little rally back up here nearing 230, but we're not expecting to see that upside last for long. Wait for those sellers to come back into this market here at around 230, give or take a few bucks. We should see those sellers step back in and continue to drive this market lower, or at least retest this recent low we saw last week around 217.5. At the moment, the downtrend is in control. If you have not gotten defensive here, now would be a good time to do so. This market looks like it's heading lower here, at least in the near term. That feeder market's weighing heavy on things while these live cattle prices continue to slip. I'd hate to see those feeder market give way of those this range we've been in here all year long. If we do get some breakdowns below there, that really could get this live cattle market to continue to push back down here near to $2. At the moment, though, we are seeing a nice little bounce here off of some leftover demand that was created last year down here in the late part of December. Nice little bounce, but we should see these bears get back into control here. We should see them step back into this market if we do get a little bit of a rally here early this week, and see if these sellers can keep driving this market lower and see some lower cattle prices here as we head into the month of August. Next up, we got our September feeders on the board. So this feeder market has been pretty sticky here between about 335 and 380 all year long. A lot of our contracts here so far have been stuck in that range up to this point. We are seeing these back months already trading down into the 330s and 320s, but September here still holding on to that 330 to 380 range. At the moment, we did see some big wide ranges last week, some increased volatility, but the bulls are doing a decent job of fighting back here. We have tested this mid 330s area a couple times so far this year, dating back to March and early June, putting in that yearly low back here on the 4th of June. We came within inches of testing it last week, 333 trading on Thursday, but seeing a nice little bounce here. Bulls trying to rally the troops here and offer some support between about 333 and 340. We'll have to wait and see if they can continue to keep this up. This is a pretty nice little line in the sand to trade around here, so bulls need to defend this line down here, and if they do start to give that up, these sellers could really take over this cattle market like we're kind of seeing over here in these live cattle prices. So make sure that these bulls continue to defend 333 as long as they can gather up enough support here. We could see them try and make a rally attempt back up here into the mid 350s, see how we act around these averages. But as we can see here, this market hasn't really respected those major averages all year long as we've been stuck in some pretty range bound conditions. So rallies back above 345 could open the door to some upside. Look for this thing to push back up into the middle of the range, not a spot to be doing a whole lot of activity. This is a pretty messy spot to be involved, but at the moment these range lows are trying to hold, and we do expect to see these range bound conditions continue until close down here below 333 negates that. In the meantime, if we do see a breakdown and some heavy volume selling pressure down here below 33 at any point this week, continue to get defensive, raise cash. This feeder market is kind of looking heavy here at the moment with those live cattle prices continuing to slip into some new yearly lows, and we could see it start to pull this feeder market with with it, so just be cautious of that. Make sure you know where to defend yourself, know where your line in the sand is. We'll have to wait and see how this market responds in the week ahead, but the bulls have a chance to keep this thing range bound. If they don't, we could see some lower cattle prices and see these feeder markets continue to slip back down closer to $3. Next up, we got our December corn futures on the board. Last week, we saw this corn market continue to rally. We've seen some pretty choppy action here over the last couple weeks as we've danced around these major averages. But last week, we saw some good upside early. Prices opening up with that Sunday night futures open last week in the 470 to 475 area, rallying the troops there and seeing a nice little rally up there nearing $5. High of the day on Friday coming in at 492, but seeing some nice upside back above 470. We have seen this market remain pretty sticky down here in the mid $4 range here over the last year or so. But with all that Iran situation that we've been, all that fun stuff going on over in Iran this last couple months here, we saw this corn market trade up here between about 470 and $5. With last week's breakout back above 470, looking like that's going to be the playing field here as we go into the next week. Look for this thing to continue pushing up here towards $5, but we've had a lot of resistance up there, even in the heat of battle here back earlier this spring. So at the moment, not really expecting any major upside beyond $5. If there is continued rallies back above 505 and these recent highs for the year, that would be the time to start looking for some more upside. But at the moment, we'd like to see this, or we expect to see this corn market remain pretty sticky here between about 470 and $5. Look for this action to continue similar to what we saw back this spring. And next up, crude prices also continuing with their rally last week. This market has been beat down all the way back to our breakout point here at 66.5 over the last couple of weeks. But here since about the first of the month, we've just been in a straight shot right back up here into the 90s. Last week we saw a nice rally here above our major averages. The bears really giving up here last week as those bulls drove right through those averages and this downtrend line that has kept this market moving lower since back here in April. At the moment, with this push back above 87.5, we cleared a lot of these prior lows and makes this $90 to $100 range come into play. At the moment, the bulls are in control here, and we should see them continue to rally. We're going to continue to see some increased volatility and some more news-driven environment, and another news-driven environment here for this crude market. Early bids above 93.5, which was last week's high here. We'll see a pretty sharp spike up here towards $100. Look for this market to come up here. If we do get an early break out here above this level this week, look for it to snap up here between $100 and $105. We got a lot of sellers up here. That's going to be a place where we can find some more inventory and help this market trade. So that'll be a spot to watch here in the week ahead. But in the meantime, this thing has just been pushing nice and steady here over the last couple of weeks, and we expect to see that action continue. As long as we remain above 87.5, we expect to see 90 to about 105 come into play here. But if the bears are able to get a pretty significant breakdown on some decent volume back below 87.5, we could see those sellers take back, and we could try and bleed down the back end of this this downtrend here and just kind of follow this slope here back down into the 70s. We'll just have to wait and see. 87.5 is going to be an important level to watch in the week ahead. Watch for that, and any sort of bullish breakouts here above 93.5 will lead to $100. So fill up your tanks and get ready for some more upside in this crude market, as gas could be getting more expensive and oil prices could be getting more expensive here in the week to come. Wait for 93.5 to trade or to see this market break back down below 87, and that should lead the next leg here for this crude market. Last week was a fairly disappointing week in these indexes. This market continues to turn around in this range. The S&P just kind of hanging out up here right around 7,500. The Nasdaq continues to lose some more ground here with a pretty nasty close last week nearing these recent lows from June. This market just teetering right on the edge of these recent lows and that 200-day moving average, making this Nasdaq index look pretty heavy here after this impressive rally. After all this digestion we've seen over the last couple of weeks, we just have not been able to gather the support late. We're kind of seeing some mixed results here across our mega caps, which are weighing heavy on these indexes. Lots of earnings to be looking forward to in the week ahead. We got Apple. This is about the only true leader we got out of our mega cap names that make up the bulk of these indexes. Apple's a good one to keep on your radar. That's going to be continue to be a leader here. We do have earnings coming up this week, so be cautious of that. Also got Microsoft, Amazon, and Facebook all reporting earnings in the week ahead. So be cautious, be mindful of those guys, as those will weigh pretty heavy on these indexes and the directional moves for the week ahead. I'll have to wait and see what kind of response we get to those earnings. But if it's anything like last week's with Google and Tesla, we had some pretty bad reactions to those, with both of those names losing some fairly significant ground and weighing heavy on these indexes, which is what we saw late last week, where it kind of pulled this S&P back down to that 50. NASDAQ giving it up again and testing these recent lows. The Dow continues to be where the relative strength is at here at the moment, but this was the laggard, and when the laggard becomes the leader, that's time to get a little defensive here. So make sure that the Dow is able to hold that 50-day average. If it does start to slip down here below 51.6 to 51.7, we really could see that selling pressure start to increase and see this Dow index start to pull this market lower. NASDAQ is already looking kind of heavy here. Wait for these major mega cap names to report their earnings, and we'll have to see what kind of directional move we get there. But at the moment, these indexes just not looking great. We do kind of have a mixed bag here amongst all these mega cap names. A couple leaders, or the Apple being about the only true leader there, but we do have some decent bases being built amongst some of these names. Just gonna have to wait and see if those earnings are able to push them in the right direction. But in the meantime, not a bad time to get a little defensive here, raise some cash, as we could be seeing some increased volatility or a little bit of selling pressure here across these indexes if they do start to slip below the 50 here in the week ahead. Be cautious, watch those areas. There are still some decent spots to be putting money to work out there, but now is the time to be pretty selective. This is not a broad rally type of environment, so be very selective with where you're putting your money, and we'll have to wait and see what kind of reaction we get to some of these mega cap names, and that'll give us a better picture here as we wrap up the summer and head into the fall. But at the moment, these indexes all are looking pretty choppy, and not really expecting any easy dollar environments right now. Continue to be defensive here. We'll wait for these earnings to play out, and it should give us some better opportunities, or at least a better roadmap going forward. In the meantime, raise a little cash, take some of these profits that we've seen that have been given to us since this spring rally started back in late March. It's been a pretty good environment so far, so don't be afraid to protect those profits as we head into the week ahead with all these earnings and last week's negative reactions to Google and Tesla. Not a bad time to be defensive. If this market continues to find some good support and able to build back up here and take out some of these highs, we'll we'll start to deploy that capital again. But in the meantime, now is not a bad time. Just kind of sit tight here while these indexes turn around and we wait for a lot of those big names to report their earnings. That's all we got for this week. Thank you everyone for tuning in. Catch you guys tomorrow night for closing comments.